All right, before I talk about these losing trades from this week, back in 2011 and most of 2012, I had a unique opportunity to work with a software development company. Their goal was to build a high frequency trading platform that anybody could use. And it was a lot of fun because I learned a lot of things about software, the market, all kinds of things. Well, one of the weeks that we were running this program, we had over $738,000 in losing trades. And most of you are probably surprised because that's a lot of money. But what I haven't mentioned is how much in winning trades. So this video is twofold. One, what I want to attempt to do is help you focus on winning and not focus on losing. And if you watched that video on how to fix your losing trades once and for all, you at least have a glimpse at part of my approach to the markets. And really, that's just a small part of it. So the winning trades that same week were more than 2.3 million, and that's inside of a single week. So obviously, our net was a few thousand shy of 1.6 million for that week. Now, a lot of you are going to ask, and I would have you hold off on your questions, that platform is not available. In the end, after 2 years, see, what we tried to do was get it to the point to where, even if you had $20,000, you could run it. But the best strategy that we had come up with, you still needed a couple $1,000,000, and so it didn't happen as we had hoped. So of course it went to institutions, and the rest is history. And so in the email you saw down 35.75 points. And so what I want to show you, and this is really a follow-up to last weekend's training video where I talked about the box and the auto box, and I didn't even include trading overnight. So these statistics are extremely raw, and when I say raw, I mean there's no fluff around them. They're black and white, cut and dry. And that's one thing that a lot of traders really like about the box, is because before you even get into the trade, you already know how much you're risking, and the profit potential in each trade is going to be different. But there are ways to maximize that. And fortunately, we have these horizontal lines, and these are what we call profit levels. And so had you taken every single trade during the regular trading hours, now the overnight session, I did not figure that out, but I believe it is pretty close to what the regular trading hours did. And the reason why I say this is because we had just as much movement most overnight sessions as we did during the RTH. A couple times it was actually more. So you could pretty much double these numbers. Now that's just an estimate, and that would be your result. So during the RTH, regular trading hours, for the entire week, there was only 11 losing trades. And those 11 losing trades, 100%, if you would have taken each one of those trades, there's a 100% chance you would have lost them because they were losing trades, and they totaled 35.75 points. So now you know what I'm getting at. So what about the winning trades? And that's what we want to focus on, because if we're going to trade the markets and continually build our accounts, we want to focus on winning trades. Well, we had 67 winning trades that totaled, and these are maxes, over 500 points. So the net was 467.5 points for the week. 467.5 points. Now, I already know some of you are saying, well, I'm not going to get every single tick on every single run. And I agree with you. That's not going to happen. So even half of, if you were to average half of the runs, you're still 230 points for the week. And just to put this in somewhat perspective, if you're trading the regular ES, that 467 points is over $23,000 per contract. Now, of course, we're not going to get every single tick on every single move, but we can get a chunk of it. And so even if you're at somewhere hovering around 50%, you're still 230 some odd points trading regular trading hours, which of course puts you at $11,687 per contract. So even if you're brand new, you're getting used to it, even at a quarter of the movement, which is not difficult to do, you're still at $5,800 per contract. And depending on what broker you have, contracts are anywhere from $300 to $500. So that's taking 100% of the losers and getting anywhere between 25% of any given move or greater, which most people should be able to do because most people don't just pull out right away. And I know some of you are still saying, yeah, but I just see what I'm trying to do is I'm trying to get you out of this mindset where you're focusing on these losers. So even at an eighth, 1/8 of the movement, which is almost impossible to do because in order to get an eighth of overall movement, you have to pretty much get out immediately. And some of these pushes happen so fast, you don't have time to get out immediately. So even at an eighth of the movement during regular trading hours, we're not even talking about overnight sessions, which was unbelievable. And a couple of you I emailed at 4 o'clock in the morning and 5 o'clock in the morning my time because I was still awake trading these markets. Like, it's ridiculous. So even at an eighth, you're still at $2,900 per contract. And by the way, this is not hindsight. This is actually what happened. And as you can see, I'm showing you the same chart that I've been showing for the last 10 years. I'm using the same exact thing. And the reason why I'm showing you the box is, one, to follow up with the prior video about the box, and two, I've said this probably 1,000 times, probably 100 times a year, if not 200 times a year over the last 10 years. When we have markets that are extremely volatile, the box is one of the best tools, in my opinion, to use. And why is that? Why would we want to use something like this as opposed to something else? Now, there's plenty of things you can use, whether that's my tools like prediction points or one price or key turns or anything else. You can use all of those. All of those were phenomenal. But when the markets are moving like they're moving now, this is one of the easiest ways to carve realistically large profits out of the market. So I just ran through some numbers with you, and even at an eighth, which is honestly kind of pathetic, but an eighth of the movement, you're still at $2,800 a contract. And I know some of you trade a lot of contracts. Some of you are just starting out, and that's fine. 1, 2, 3, 4, 5. So I just scrolled back from the overnight session. So after Thursday closed, coming into Friday, and we could look at any day. But if you look here, the first trade that was long, it was a really fast one. This one you probably actually would have lost because we don't get down to the first profit level and we start heading up. But between these two, you should have probably got close to breaking even, probably still down a little bit because this one didn't go very much. But now you're long, and you're still long because we have a box, new signals form, we're still at these highs. So when you're long and we're close to our highs and we have another box form, why would you get out? We get another blue arrow. Stay long. Goes to the fifth profit level and even a little past that. This is 21 points right here. From your entry here to where we peak out, it's about 19 and a half points to the fifth level just in this move right here. Now you can see why I stayed up a lot this week. It was absolutely worth not getting any sleep. This one you may have lost, but you're up. If you took this one, you're still up over 15 points in those trades right there. Lose a couple there, get it all back there, and then now we're into Friday, and Friday was a big day. So not a lot of analyzing markets. It's just, the box is simple. We have an arrow, it's blue, we buy, period. These levels here what they tell us is that, hey, look, this is the way I look at it. We could run, but consider taking some profit here because we could turn. And you can see we turn at that first level. We turn at the first level. We turn at the second level. That's why these are suggestions, because then you have times where it takes a bit longer. But see, we still turn at this level. It was given all the way back here. We pause there. We drop a little bit. So whether you scale out or whether you are just entering in one position and you put it all the way to the most extreme exit, and then you simply trail that trade manually, doesn't really matter what you do. There's nothing more to it than that. Red means sell, we enter short. Blue means buy, we enter long. And that's it. There's nothing more to it than that. So the last thing I'll say is that when I talked about the Autobox at length, remember, all that is to help you get into these trades faster. You don't have to use that. Honestly, I like manually trading. Call me old school, whatever you want, but I really enjoy the thrill, the exhilaration of clicking that button, knowing I'm loaded up on contracts, and seeing that thing every single tick, those dollars change rapidly. So we could go through any day and it looks pretty much the same, pretty much like this. If you choose not to use the box, obviously that's your choice. It's perfectly fine. But as someone who's been trading for 2.5 decades, what I would tell you is find something that, number one, enables you to capture a lot of this movement. Has nothing to do with greed. It has everything to do with opportunity. And then two, once you've found that vehicle, make sure it's not something that forces you to have to think a lot. When these markets are moving fast, you don't have time. And that's why so many people like using the box in markets like these, because we're literally just waiting for arrows. Every single one of these arrows is a trade. A box forms and we'll have alternating red and blue, in this case arrows, until another box forms. It's down, it's up, new box, down, up, new box, up, down, new box, down, new box, down. Did you know that this is Friday, October 11th. Let me go to the end of it. Just the RTH. Remember, I did not do overnight. I just showed you overnight. And there was, I don't know, 50 points maybe. If we look at a max, maybe you can get 20 of that. Maybe some of you that are more experienced, you can get 30 to 40 of that. During the RTH alone, on Friday, October 11th, net, so after losing trades, and there was 3 losing trades during the RTH, net 151.25 points on Friday. And again, you know what? Maybe you're getting out quick and you get an eighth of what was available. What is that? An eighth of 151, something like 18 or 19 points. So you should be up dozens of points a day in these markets. Dozens. When the market's moving like this, there's no excuse. Use something that's simple, use something that's accurate, and pull the trigger and get out where you're supposed to get out. If a loss happens, take it. Don't hold on to it, take it. Those of you that have not used this tool yet, I have videos that explain where most traders will place their stop with this tool. So below this video, there are some links for those of you that have not yet started with this, and those of you that already have this, make sure you're using the tools that you have. What I never tell people, and it doesn't really matter, but I spent many years and hundreds of thousands of dollars, literally, developing these tools. And the reason why they work the way they do is because so much time and money was put in to developing things that work, things that make the job of earning money through trading easier. So we're heading into what I think is going to be another volatile week. Don't just sit and watch on the sidelines. Make sure you're taking action. And the most important thing, have fun with this.